All right, what's up, guys? What's up, everyone? Welcome to SOG Capital. You know how we do it here. I try to make the whole markets simple for you guys. Like I said, I'll be dropping videos back to back going forward. This remaining 6 months of the year. Yeah. So this particular video, I was just sitting down today, this evening, and something just popped up in my mind. I'm like, yo. Retail traders, yeah, CFD retail traders, you guys, you complicate technical analysis too much. I just don't know why. It's like they want it to look so difficult outside there for you guys. I when I started my research into these markets, I dedicated 4 years for purely research. I was putting money into the markets, but I knew it was school fees I was paying. So the first 4 years of my actively participating in these markets, it was basically me studying. I was studying how to piece the fundamental and the macro together with the technical, how to really understand the technical, so I know exactly when it's lining up with the fundamental and all of that. So that was my studying moment. Okay. Now, like I said, it took me 4 years to study. So I think in my third year, I realized something on I think that was GBP USD because I used GBP USD to study, okay, to study technical analysis very, very well in the CFD space or CFD trading. So I realized I think it was 2023. That's if I'm not wrong. 2023, that's what I used. That's what I used. GBP USD. That's what caught my attention. Now I realized how the weekly time frame held its direction for like 6 months straight. So that was what it clicked. I was like, wait. And the following year, I watched the markets again, and I realized same thing. Weekly time frame. Once it shifted across GBP USD, DXY, and the Euro USD, it held like they all held their direction, their technical direction, and of course they were lined up. They were lining up with the macro and the fundamental thesis at that time. So it was an amazing setup those times in 2024, 2023. You know, so one thing I noticed is. As a CFD trader, the weekly time frame direction, the weekly time frame flow should be your go-to like market. Weekly time frame. That should be your number one. That should be your number one time frame, the weekly. I always tell people it's not that see, investing in these markets ain't that difficult. Don't let them lie to you outside there. Okay, so currently I'm on BTC. I'm going to use BTC as an example. I like trading BTC and gold because I mean they move nicely. I just love the crypto and the metal, the metals. I trade currencies as well. I like GBP USD. I like Euro USD. I've not done any GBP USD or Euro USD analysis on the page yet, but I will do. I will do probably maybe tomorrow or when the week starts. Yes, when the week starts probably. So if you take a look at Bitcoin right now, okay, let me demarcate it to this particular year. What do you see? This particular year. You can see Bitcoin has clearly been in a downtrend. Clearly. It was here, it was at this place that it tried to bottom out, pushed higher. Okay, but eventually it still rolled back because sellers were too strong. And if I drop to the monthly time frame, you realize that it made a lot of sense why the weekly time frame had to, it was just a push higher and had to flow back. You get it. Now, for me as a trader, so far as the weekly time frame is bearish, I am selling Bitcoin. And this is the time where it also aligns with the macro or the fundamental thesis on the side of the DXY or the dollar index. Although crypto and the dollar BTC and the US dollar, their correlation is not really perfect, like the way you get it for gold or for GBP USD and Euro USD. You get it. Yes, Bitcoin can act funny sometimes. It can trade on its own, fundamentals and macro thesis, sometimes totally neglecting the DXY strength and all of that. But at least you have it lined up most of the time. What I'm trying to say is if the weekly time frame is going down, I am selling that particular asset. If the weekly time frame is going up, I am buying that particular asset. I don't trade against a weekly time frame. You understand? So with BTC right now, okay, so Bitcoin is coming down on the weekly time frame, meaning I want to sell it. You understand? So until now, when does it negate within the week? within the week, you'd see if you know if the market will want to trade and break out. You will know, and I'll show you. So within the week, you drop down to the 4 hour time frame. The 4 hour time frame controls the narrative for what will happen within the week. You understand? Okay. So if within the week you see the 4 hour time frame positioned higher, all right, prices keep on pushing higher on the 4 hour time frame, and it gets to the highest point where the weekly time frame supposed it gets to the highest price on the weekly time frame, and you see the 4 hour actively still trading above it, or it even trades up into it, breaks it, confirms, and starts heading higher. Then you know that that particular week we are breaking it. I don't know if it makes sense. You understand? So far as the weekly time frame is pointing to the downside, I am selling that particular asset. I am selling that particular market. If it's pointing to the upside, the weekly time frame is pointing to the upside, I am buying that particular asset. You understand? Good. So now with BTC, the weekly time frame is pointing to the downside. Great. Let me now go down to, let's say, the daily time frame. I'm doing the time frame by time frame. But at the back of my mind, I know that the weekly time frame is going down. So my analysis is that I am bearish on Bitcoin. Let's even take out the fact that I've taken out the macro, the fundamental thesis, just purely technical. I am selling Bitcoin just because the weekly time frame is going down. Very good. Now, on the daily time frame, you can see currently the market has been dropping once as it hits this particular high on as I hit this particular high right here, it's been creating lower lows and lower highs and coming down. All right, we're having a pullback here. I have a feeling we're going to flash lower pretty soon. If you watched my previous video, you realize that I had a trend line at all the way from the back. That's like a third touch of the trend line that happened over there. Okay, so now the daily time frame also trying to shift. So the next important time frame that I always look at is the 4 hour time frame. The 4 hour time frame will tell me what is happening week after week. You understand? Very good. Now, take a look at what happened last week. So, this is last week. This particular area is last week. From this particular area, a new week has opened. So, you have, So, last week, when BTC opened the week, it traded higher. So, if this particular trend had continued, then you'd realize that that particular week, BTC was in a retracement. Well, for me, because the weekly time frame is pointing to the downside, if the week starts and the 4 hour is going higher, it means it's a retracement into potentially better prices for me to sell. You understand? So it's not a reversal. The 4 hour is not reversing. No, the 4 hour is retracing. For me, it's a retracement. So I'm looking at getting it at the highest price levels to sell it. Now, when do I start looking for sales? So you can see price going up, price going up, price going up. I am waiting for price to shift on the 4 hour time frame. Then the shift happened right here. Break of structure. This is why I start looking to sell. I can I can literally put a sell position here, right after the break of structure. Have my stop loss here. Then I hold it. And I'm a swing trader. So once I hold it, the idea of the weekly time frame direction comes to play. So I can hold it for as long as the weekly time frame is bearish. You understand? Once I execute on that trade, for the remainder of that particular week, I am bearish. For the remainder of that particular week, I am holding that position. And I will hold it into the following week until the weekly time frame changes direction. That's how I trade. So it's not very difficult like that. Understand the weekly time frame direction, which is very easy to spot. Once you drop down to the weekly time frame, look at the most recent direction of the market. Look at the most. I always tell people, you are looking far too much. Looking far too much. Look at the most recent direction of the market. This is the most recent direction of Bitcoin. This is the most recent price action. Here cries plenty. Here is behind too much. It's plenty. Look at the most recent direction. You understand? There's this analogy in trading that they tell you to look all the way back, so you mark your support and resistance from there. There's something I always say is that whatever is happening now, if there is any price action behind here, that's whatever is happening now has to react to. It will react to here, where we are at the moment. I don't have to go all the way back looking for support and resistance. When I look at the recent price action, okay, whatever is happening now, the possibility of this mimicking whatever is happening in the past is like, it's like 90%. You understand? And of course, the reason why you can't that's the reason you can't rely solely on technical analysis, because probably in the past the market got here and it held. It held because of certain fundamental and um macro positioning at that particular point in time. That's why the market held and it bought. But if the market gets to this particular level again, and you expect it to buy just because of a technical support, you might be wrong, because on its way down, it might be respecting a different macro and the fundamental cycle. You understand? Yes, that's why I tell people all the time, you need to understand what is happening from the macro perspective as well. So I don't trade just because, or I don't look for trade just because it was a support. When it gets here, it has to hold as a support. You understand? So I don't really look at what happened in the past. No, what happened in the past has already happened. I look at what is happening in the present, the most recent price action. What is happening now? That's what matters to me. And with what is happening now, it's not just a technical bit of it. I'm looking at it from the macro and the fundamental perspective as well. So don't go all. Well, that's the advice I'll give you. This is not financial advice though. It's for educational purposes. Don't go all the way back. You are going back too much. You are going far too much. Look at what is happening now. Look at the most recent price action. You understand? Once you understand the most recent price action, the rest will follow. Then the 4 hour time frame, like I said, becomes your active direction for the week. Okay. So if I'm looking to sell and we come into a week and the 4 hour time frame keeps on creating highs and keeps on going up, I am sitting on my hands. I'm not engaging because the direction of the flow of the market tells me that I am supposed to buy. I'm not engaging that market. I'll relax. I'll wait. Yes, I'll wait. If by Wednesday, right, that's like midweek, if by Wednesday, I've not seen a shift and the market continues giving me strong positions and there's no macro or fundamental reason to back that particular move, I'm not executing any buy. I'll relax. I'll wait. You understand? I'll wait. I'll relax. That is one of the reasons why I created a SOG Capital Macro Tracker as well. You get it. And I told you guys you can get it on www.sogcap.com. You can go on there and go get the macro tracker. All right. You can read the blogs I post as well. Very, very educative. sogcap.com. sogcap. sogcap.com. I built this specifically for retail traders after my years of research. Yeah. I told you guys it took me 4 years to research. You understand? So I built it specifically for retail traders. Yes. So if the 4 hour time frame, now the moment the 4 hour time frame gives me that bearish shift within the week, and I see the confirmation, I am executing because my weekly time frame is a sell. You understand? Same way, if my weekly is a buy, if my weekly is a buy, and we start a particular week, and the 4 hour is coming down, it's coming down, it's coming down. I am not selling that market. Why? Because my ultimate direction of the market, which is the weekly time frame, says I should buy. I'll relax. I won't execute any buy. I won't execute any sales. No matter how juicy the sell looks, the only time you see me trade against the weekly time frame is if there is a major fundamental or macro um shifts in the markets. There's a major release that comes out that totally shifts the whole macro narrative, then you probably see me join the break of structure that's about to happen. But if not, I will relax. Even that one, I will relax and see by Thursday, Friday. Because mostly you get the market react to the headlines within the week, drop, 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 drop. But latest by Thursday, Friday, last, you see the shift you are looking for. That is what tells me. And once I see that shift across board, when I say across board, I mean the DXY, the Euro, the GBP, USD. These three markets are perfectly correlated markets. So I normally use them as a gauge as to what is actually happening in the land of the US markets. Okay, well, all I trade is I trade dollar influence pairs. So when I look at these three pairs across board, I'm able to understand perfectly what the DXY wants to do. And if I understand perfectly what the DXY wants to do from a technical and a macro perspective, I can easily trade any other dollar influence market. You get it? Yes. So like I was saying, if the weekly is buy, the weekly direction, let's say technical direction is a buy. Let's say I'm not even using fundamental or macro, I'm just using technical, purely technical. We start the weekend, the market starts coming down on the 4 hour. Remember on the 4 hour controls the weekly narrative. Okay. It controls what is going to happen for that particular week. So we start the market starts coming down. I am not selling. Why? Because my weekly is a buy. I wait for that 4 hour shift. Okay. I'll wait for that 4 hour shift. Once I see that 4 hour shift and I get a confirmation, you see me execute my position. You see me execute my position. And trust me, the market will move in my favor. The market will move in my favor. You understand? So let's not overcomplicate this whole technical analysis thing. Guys, use the weekly time frame. Understand the weekly time frame direction. Once you understand the weekly time frame direction, jump to come down to the 4 hour time frame. Now, when the week starts, whatever assets we are trading, look at it from the 4 hour time frame. Once you've gotten the weekly time frame direction perfectly, come to the 4 hour. When the week starts, be on the 4 hour time frame. Look at the direction the 4 hour is moving in. If the 4 hour is giving you, what's the name? Is giving you price movement that is against the direction of your weekly time frame, relax. Don't be fidget. Don't fidget and then get into a trade. Don't FOMO and get into a trade. Relax. Let market do whatever it wants to do. If by Wednesday, Thursday, you've not gotten the shift you are looking for, then probably you can join the trend. But if not, relax. The shift will happen. Sometimes market just has to go fulfill certain technical levels. It has to get. I don't complicate my trading at all. I don't. If it's there, it's there. If it's not there, it's not there. You understand? Don't they're drawing all over the place and then all over. Oh, it's too much. It's too much. You and then see once you execute a position in line with the weekly time frame, trust me, you can hold it for a very long time. That's how come I'm able to hold my trade for very long for long. You can hold it for a very, very long time. You are not scared because you understand exactly what the weekly time frame is saying and you are moving in line with the weekly time frame. You are not scared at all. You can hold that position for a very long time. And the amazing part is when it lines up with fundamental thesis or the macro thesis too, it's just superb. It's just superb. When the weekly direction lines up with the macro, the fundamental direction, it's just amazing. There are times where the weekly can decide not to move in line with the fundamental or the macro. And yes, it can happen like that. The fundamentals will be saying one thing, the weekly will be saying one thing. So mostly when it happens that way, I know that the market just wants to fulfill certain technical levels, or there is something the market is seeing that is not yet priced in and to reveal itself eventually. Because macro and the fundamental, it always moves with the technical. Always and always. If you start tracking macro and fundamental very, very closely, you realize that they always move together. You understand? They always move together. They are not, they hardly diverge. They are always together. They are always together. All right, guys. So this was what I wanted to show you guys. Use the weekly time frame for your overall direction. If it's going up, look for buys. If it's coming down, look for sells. Use the 4 hour time frame when the week starts to gauge the flow of the market. If the 4 hour is moving in line with the weekly, you have a trade. If the 4 hour is moving against the weekly, relax. Don't trade. Relax. Wait for the 4 hour to shift whether for that particular week and then execute a position that you want to execute. Stay safe. Bye bye.